I think about all the different markets Bitcoin is going after, like all the places where Bitcoin can compete. As an example, it can compete with gold. It can be a digital form of gold, a way of storing value in a digital format versus a physical format, as we discussed. And that's a $25 trillion market. It can be a store of offshore wealth in the same way that like London or Vancouver real estate is a store of offshore wealth. It can be used in a currency format in the way that El Salvador is experimenting with it. It can be used for bulk international transaction settlement. Like I think, for instance, we will likely see in the next handful of years, companies or countries trading oil denominated in Bitcoin. It can be used in an institutional setting as a diversification tool. The way I arrive at a valuation of Bitcoin is I ask myself, for instance, over the next 10 years, what percentage of the gold market do I think Bitcoin will take?
It's strange, isn't it? Bitcoin has ETFs pulling in billions, institutional investors quietly accumulating, and regulatory momentum finally leaning positive. Yet prices seem stuck in the mud. For months now, investors have been waiting for that next explosive leg higher, the one that historically defines a Bitcoin bull cycle. But this time, the cycle feels different. The data says the fundamentals have never been stronger, but the price action tells a quieter story. And that disconnect is exactly where the opportunity lies. In moments like these, when emotion fades and conviction is tested, the smartest investors look beyond the charts. They focus on the structural forces reshaping Bitcoin's role in the global economy. Think about it. Bitcoin is no longer just digital gold. It's competing across multiple trillion-dollar markets, from global store of value and offshore wealth protection to cross-border settlements and institutional diversification. Each of those categories represents an enormous addressable market. Gold alone is worth over $25 trillion, and even a modest slice of that pie could send Bitcoin to valuations that make today's stagnation look laughable in hindsight. And that's exactly what Matt Hougan, Chief Investment Officer at Bitwise, believes is now unfolding. In his latest interview, Hougan outlines how these multi-market tailwinds, combined with deep-pocketed institutional demand, could set Bitcoin on a trajectory toward $200,000 by year's end, and potentially over $1 million within a decade. His reasoning isn't emotional hype. It's grounded in data, adoption curves, and the simple math of limited supply meeting massive, sustained demand. So in this video, we'll break down Hougan's full analysis, from why Bitcoin's price has lagged behind its fundamentals, to the critical sell walls holding it back, to the catalysts that could send it surging higher. If you find value in this kind of deep dive content from top industry voices, make sure to hit like, subscribe to the channel, and turn on notifications. Thanks for the support, and enjoy the video.
I mean, what we're seeing is continued demand. So the audience we serve, primarily professional investors, financial advisors, family offices, etc., institutions, sovereign wealth funds, there is persistent buying. And you see that in ETFs, Bitcoin ETFs, despite the pullback, despite the rocky October we've had, have still pulled in about $4.3 billion. It could still be a record month for ETF inflows this year, the best month ever if we get a strong uptick in the last week or so. So I think the institutional bid for crypto is just persistent and not going away. That's what I hear in my meetings. That's what we see in the flows in our funds. That's what we see in the flow in our competitors' funds. And that to me is the overwhelming story. Institutions wanting exposure. The question is, why hasn't the price reacted to that more? And I think that's a reasonable question to ask. My gut tells me I will say we haven't revised our price forecast. Mm-hmm. So we haven't changed from saying we think it could still get to 200K. Obviously, that would be an extraordinarily move. And even I think maybe it won't fully get there, but I think it's going to move directionally in that way because all the trends that would drive it there are in place. Regulation is still positive. Institutional demand is still positive. I think there is just this wall of existing holders who have been willing to sell and have kept the price down. But I think we'll close the year. I think we have new all-time highs ahead of us before the close of the year. I think we'll make a run up towards 150 and then possibly beyond. And again, we haven't revised the $200,000 target because I still think there's a world where that's possible. Maybe it's not the base case, but I certainly think it's possible. We can see end of year melt ups. We've seen them before. I think we could see them again.
Are you seeing a rotation out of, maybe some of like the whales, some of the bigger holders moving into the treasury companies? Is that why maybe there's some more of this selling than normal? I mean, what are you seeing on that end?
Yeah, I think we've seen a few things. So one is you've seen long-term holders sell assets. That's just objectively true in the data. And I think that still anchors around the $100,000 price mark, which as a reminder, if you look at sort of platforms like River and others, their two primary limit orders are at 100K-ish and $1 million. So I think those are two significant sell walls where existing holders are willing to sell. And I think the primary thing is it's just taken longer than we've expected to work through that. I do think there's been some rotation into digital asset treasuries. I think there's been some rotation into ETH and Solana and other smaller assets. But mostly, I just think that it's the $100,000 price target is probably the most important price level since we crossed $100. And so it's taking some time to work through the gravity of that price and release to the upside. I continue to think at some point, if we wear through the sell wall in and around 100K and get release, I think there's an air pocket up above. I think we could run up relatively quickly, but I've been surprised at how long it would take. I would share one note from gold, which I think I talked about a little bit on the Milk Road podcast. Everyone's saying gold is ripping. It's gone from $3,000 to $4,000 based on central bank buying. And that is true. But the other piece that is true is the central bank started buying in 2022 when the US seized Russia's assets. You saw central bank purchases double that year, and then they've stayed the same for 2022, 2023, 2024, and 2025. The interesting thing about that is it's only in 2025 that the price has really skyrocketed. And so I think what that tells you is that central bank demand had to wear through people who were willing to sell at lower levels before it exhausted that supply and the price took off. I think that may be a lesson for Bitcoin if we continue to see these flows into ETFs. Eventually, we'll wear through that supply. But yeah, we haven't yet. But as I said, we're not revising our target yet. When I look at the crypto market today, there are two things that stand out to me that I think the market has wrong. The first is that it's pessimism over the Clarity Act, I think, which is the next piece of legislation in Congress. I think it's misassessed the likelihood of that probability. I'm looking at Polymarket right now. It's saying there's a 28% chance of the Clarity Act being signed into law this year. Now, with the government shutdown, that definitely complicates matter. But absent the shutdown, I think the probability is higher than that. What our reporting and people in Washington tell us is that the conversations are fairly productive, even between Republicans and Democrats, and that there is a pathway to move that forward if the government reopens. So I think that is a potential catalyst for the end of the year. The other one is the one you raised, which is I think the market's expectation is the Bitcoin Strategic Reserve has basically a 0% chance. And I think that is just wrong. I think it has a very high chance of coming into form with the existing seized Bitcoin, which just expanded recently with the additional seizure we saw. And then I think there's a non-zero chance that sometime in the next year or two, we move forward with actually acquiring Bitcoin for that. I don't think it's the majority chance, but I think it's a non-zero chance. And so as an additional catalyst for the market, I think refactoring around those. Look, since the Trump administration came in, crypto has been disappointed with the speed time and again, but they have delivered on their regulatory and other promises to crypto. And I suspect that both of these things will happen. And I think the market probably has them mismeasured right now.
Hougan makes a critical point here. Despite a sluggish price chart, institutional capital hasn't gone anywhere. In fact, it's accelerating. Bitcoin ETFs have already seen over $4.3 billion in inflows this year, with professional investors, from family offices to sovereign funds, steadily increasing exposure. What we're witnessing is a tug-of-war between long-term conviction and short-term supply. While persistent buying continues beneath the surface, older holders anchored to legacy price levels, $100,000 and $1 million, are still taking profits. This is why the market feels slow. It's digestion, not decline. Like gold's delayed reaction to central bank accumulation, Bitcoin too is wearing through a layer of sellers. Once those supply walls crumble, the move could be fast and violent. Hougan's comparison to gold's 2025 breakout after 3 years of steady buying is striking. It reminds us that capital flows precede price action, not the other way around. And that's where the real catalysts come in. Because while traders fixate on daily candles, Washington may be quietly laying the groundwork for Bitcoin's next surge. Hougan points to 2 upcoming developments: the Clarity Act, which could finally define crypto regulation in the US, and the potential creation of a Bitcoin strategic reserve using seized government Bitcoin and possibly new acquisitions in the future. Both ideas have been dismissed by markets as long shots, but Hougan believes investors are mispricing the odds. If either materializes, even partially, it could redefine Bitcoin's legitimacy in the eyes of global capital. Now, imagine those regulatory tailwinds converging with record ETF inflows and a thinning supply pool. That's when momentum shifts from gradual to unstoppable. And that brings us to the bigger question. What if the entire 4-year cycle theory is breaking down?
Yeah, I don't think the 4-year cycle will hold. I don't know if we'll get 10 straight years of green candles. That would be great. But I don't think the 4-year cycle will hold. The reason for that is threefold. The first is one of the primary drivers, obviously, was the Bitcoin halving. That statistically becomes half as important every 4 years. So it's just a smaller force than it was when you and I got into crypto many years ago. It was just a much bigger deal. The second is the last 2 down wicks, 2018 and 2022, were during periods where they were aggressively raising interest rates. As you said, the highest, fastest interest rate increase in history. And if you look forward to 2026, I just don't expect that. I think we're going to see interest rates come down, as we just discussed. So I think that is moving in a different direction. And then the big thing is we just have this institutional capital that's going to move into crypto. I think it has to move into crypto. I think they can't stay at zero. And that's going to take 5 to 10 years. And so, if you look at the average month, there's like $4 or $5 billion of Bitcoin purchases by ETFs. I think that will continue forever. Not quite forever, but for a very long time until these institutions establish their baseline position. And as a result, I think that's just going to overwhelm the 4-year cycle. Do I think there'll be down periods and maybe even down years? Of course. But right now, do I think 2026 will be an up year? I do, because this institutional capital, nothing stops that train. Nothing stops the debasement
election year
train. And those are 2 powerful forces. Yeah, I think about all the different markets Bitcoin is going after, like all the places where Bitcoin can compete. As an example, it can compete with gold. It can be a digital form of gold, a way of storing value in a digital format versus a physical format, as we discussed. And that's a $25 trillion market. It can be a store of offshore wealth in the same way that like London or Vancouver real estate is a store of offshore wealth. It can be used in a currency format in the way that El Salvador is experimenting with it. It can be used for bulk international transaction settlement. Like I think, for instance, we'll likely see in the next handful of years, companies or countries trading oil denominated in Bitcoin. It can be used in an institutional setting as a diversification tool. The way I arrive at a valuation of Bitcoin is I ask myself, for instance, over the next 10 years, what percentage of the gold market do I think Bitcoin will take? What percentage of the offshore market? What percentage of this currency market? What percentage of these other markets? And then I add those up and divide by 21 million and you get a price target. We actually recently published a paper on this, doing it for the next 10 years. And where we arrived at a very conservative, I think, basis was at a $1.3 million price target by 2035. Now, my personal view is it'll actually exceed that. But to put that $1.3 million in context, all Bitcoin needs to do to get to $1.3 million within the next decade is take roughly 25% of the gold market. It's 10% now. It needs to go to 25. And the reason for that is that market is expanding over time. So a lot of people think like Bitcoin has to match gold to be worth $1 million. Not true, because the gold market has been expanding like 7% a year for the last 15 years if you average it out. If it continues that, it needs to take about a quarter of the market over the next 10 years. add the other pieces up, and you get to $1.3 million. One of the reasons I love Bitcoin so much is you get to make that investment on this digital gold thesis, and you get everything else for free. Like if it becomes an international currency, an international means of settlement, those are like free options that you get on top of this core store value thesis. I think when you do this, when you break it down into the various pieces, it's hard not to arrive at a very significant price target, which is why even traditional Wall Street has price targets of like $500,000 or $1 million or $3 million, which is, you don't see Wall Street putting those sorts of price targets on many assets, but they do on Bitcoin, because if you do the underlying analysis, that's where you end up. I think what you find with our price target is it's roughly aligned with what you hear from Alliance Bernstein. It's roughly aligned from what you hear from Standard Chartered. It's roughly aligned even from what you hear of from Kathy at ARK. She's a little bit higher. It's aligned with what Van Eck is thinking. I think what that tells you is sort of the institutional conservative approach to this ends up with a price target around that level, around, what we came up with, which is 1.3 million by 2035. It's not a guarantee that we'll get there. There's certainly worlds where Bitcoin dramatically underperforms. I recognize it's a very aggressive target, but it's consensus actually. And what Saylor is the optimistic side of that, which has a significantly higher price target. Look, he definitely could be right, but he is more optimistic than we are in our official capacity.
Hougan's argument here challenges one of Bitcoin's oldest beliefs, that every 4 years, halving events drive predictable booms and busts. But as he explains, those cycles are losing power. Institutional capital doesn't move in 4-year increments, and the impact of halvings diminishes with time. Combine that with an eventual drop in interest rates and an unrelenting flow of ETF-based demand, and the structure of Bitcoin's market itself begins to change. We're no longer looking at a speculative retail bubble that burns out every few years. We're looking at a gradual institutional accumulation phase, one that could stretch across the next decade, flattening volatility while pushing prices steadily upward. Hougan even projects that by 2035, a conservative model puts Bitcoin at $1.3 million, assuming it captures just a quarter of gold's market share. And remember, that's the conservative case. What's unfolding now isn't just another bull run. It's a structural transition. Bitcoin is maturing from a speculative asset into a cornerstone of global finance. Its potential markets, gold, offshore capital, international trade, institutional reserves, collectively exceed tens of trillions of dollars. Even a small penetration into those categories changes everything. That's why major firms like Alliance Bernstein, Standard Chartered, and ARK Invest all project million-dollar Bitcoin scenarios within a decade. They're not chasing hype, they're reading the math. Of course, short-term noise will remain. There will be dips, delays, and corrections. But beneath that volatility lies an undeniable truth. Bitcoin's network effects, its institutional adoption curve, and its regulatory trajectory are all pointing in one direction: up. When the current resistance levels finally break, it won't just be a rally, it'll be a revaluation of what Bitcoin represents to the financial world. And drop a comment below. Do you agree with Matt Hougan's $200,000 target? Or is the $1 million thesis still too bold to believe? So if you found this breakdown valuable, hit like, subscribe, thanks for watching, and see you in the next one.